Well, holy smokes, everyone. Boy, do we have some drama in the hedge fund and investing space. Ray Dalio has recently come under huge fire about his recent comments on China and specifically his comments on China's common prosperity. So everyone, what did he say that's causing so much controversy? What are my thoughts and what are my takeaways from this? Let's have a look. Well, first things first, what China has recently come out with is a common prosperity goal. Now, this sounds great. More equality, taking from the rich, giving to the poor. It sounds good in my books. But like most government initiatives that sound great, underneath the surface, there's much more going on. And what have we seen in China over the past year? We've seen the everything crackdown. And it really all started when billionaire China's richest man, or was richest man, Jack Ma, CEO of Alibaba, spoke out against the CCP. And it was at that moment he knew he stuffed up. All of a sudden, out of nowhere, he went missing for months. And then he magically came back and said, sorry everybody, I was wrong, and now I'm going to give billions and billions of dollars to help this common prosperity goal. We also saw them crack down on companies trying to IPO on the New York Stock Exchange. We saw the tech crackdown, the gaming crackdown, the private touring and education crackdown, and we saw many influential actors or sports stars also get silenced as well. So really what I think the CCP is trying to do is crack down on anyone that can challenge their authority, and they get quite jealous when they see either a company or an individual get too much influence. But later in the video, I'll get into the real simple way America can fix equality. Now, when we see a billionaire or CEO talk about China, we have to first check if there could be any conflicts of interest. And so I had a look at Ray Dalio's connections to China, and this is what I found, everyone. Bridgewater has been managing Chinese state money since 1993 and counts among its clients the sovereign wealth fund, the $1 trillion China Investment Corp, as well as the State Administration of Foreign Exchange, which manages foreign currency reserves and also has $1 trillion in externally managed assets. Okay, so that's already a red flag there, everyone. He's managing trillions of dollars of state Chinese government money. So we already know he's got a huge conflict of interest and he's never going to call out the CCP because he doesn't want to lose this cash cow. But let's get into his most recent comment that is causing so much controversy right now. Look at this, everyone. Billionaire Ray Dalio says the US needs a dose of China's common prosperity, and Dalio's support for the country is under fire from politicians. Again, on the surface, it does sound great, common prosperity. And we do really need common prosperity, but the way China is going about it is not the way. President Xi Jinping's push helps redistribute wealth and opportunities more equally among its population, allowing the economy to draw upon a wider talent pool. The campaign is often misunderstood, he said, by international investors who fear the country is returning to the communist model under Chairman Mao Zedong. And I have heard from a lot of people on the ground in China that they are worried that Xi will turn to more communist style dictatorship of Mao. And so of course this is causing a lot of criticism. But let's backtrack a bit to what Dalio was saying in 2015. In a 2015 client note that was leaked to the media, he wrote that his normally optimistic view of China had changed and that there were no safe places to invest. Holy smokes, everyone. This is very different to what he's saying now. So again, could it be he doesn't want to lose the cash cow in China? But even then, he backpedaled a few days later, saying publicly that he expected slower growth wasn't a big problem because China has the resources and the capable leaders to manage these challenges. But maybe he should have took his own original advice in 2015 because his fund is now performing very poorly, everyone. Look what's happening. As US-China tensions continue to escalate, it's one of the rare issues that both major American political parties agree on. Dalio's support for the country and its leaders is causing more trouble at home than ever, and it comes as he's facing the challenge of replacing McCormick at the top of the firm amid weak performance at his flagship Pure Alpha 2 fund, which has barely made money this year and has a 10-year annualized return of just 1.6%. 1.6%, everyone. That is absolutely terrible. If he just invested in bonds, he would have got a better return than 1.6%. And the MSCI China Index slumped nearly 23% last year, the worst decline since 2008, with investor concerns about the political and regulatory environment compounded by the pandemic. Dalio has hit back and said the US is even more risky to invest in than China. By contrast, Dalio said the US is more risky place to invest using criteria such as an economy's income generation versus expenses, assets versus liabilities, as well as a country's internal order and likelihood of external conflict. So I do agree with him there, the fundamentals in the US is not looking good as well. But that doesn't mean I would invest in China either. either. But this also wasn't his only controversial comments. He also had some more controversial comments on China's human rights violation. He said, "Should I not invest in the United States because of our own human rights issue and other things?" Dalio said at the time, "As a top-down country," he added, "of China, they behave like a strict parent." Well, everyone, I think that's a bit of an understatement. They behave like a strict parent. Really, you just got to call it like it is. They are a full-on authoritarian regime that will squash anybody that questions them. But what I do agree with, and what I've been talking extensively on the channel, is something does need to be desperately done quickly about inequality that's rising in the US, and not just in the US, most developed nations. Because if we study history, inequality can only go so far before people say enough is enough. If they've got no hope of owning a home, if they've got no hope of getting out of the rat race, if they can barely afford to eat, they'll say enough is enough, and this will cause huge unrest. Then you may think, well, how can we simply fix inequality? What China's trying to do is trying to go down the socialism route. But also what I've learned from history is socialism never works. Now you may think that capitalism has failed in the US and it's what's caused this inequality. Well, we don't have true capitalism, and we don't have free markets in the US. And what we really have is crony capitalism. We have capitalize the profits and socialize the losses. And while many people in the US are opposed to socialism, we already have a form of socialism. What's happened ever since the Federal Reserve has created is they have created socialism for the rich, for the banks, and for the mega corporations. And what this has created is boom bust cycles. They'll create an economic boom by lowering interest rates, pumping money into the economy. Everybody will speculate, getting involved in the markets. They'll take on leverage, debt, buy up assets, and then the economy will overheat or create inflation. So then central banks and central planners lift interest rates, tighten monetary policy, and then they crash the markets. And what happens? The poor, the middle class, they lose their assets, they lose their wealth, but the rich, they can afford to hold on and they don't sell, and they also have access to credit that the average Joe doesn't have. So then they can come up and buy up all these assets for a discount during the crash. And what this has also created is mega corporations that are so-called too big to fail. But really what's happened is they've indoctrinated people. They've made people believe that if banks go down, all of a sudden the world would end. But what you have to know is, again, when you learn from history, there were many banks that went down in the 1800s, in the early 1900s, but the world didn't stop. Another bank would come, they would run it more efficient, they would run it better, and they would be more productive. But what we have now, every time a bank makes a boo-boo, well, what they're called now are primary dealers, and they have access to liquidity and access to lending from the Federal Reserve at just 0.25%. So then they can just pretty much get free money, and this is creating zombie companies. Companies that just take on cheap debt, cheap credit, and instead of investing in their employees, and investing in the company, and investing in infrastructure, they just take this credit and buy back their own stocks. And I could go on and on, everyone. But what we really need is, we need to cut the regulation, cut the bailouts, let the market correct, stop the intervention. We need free markets. Free markets is what would create real wealth. And also what we need is a deflationary crash. We need prices to go down. Now you may think this will cause a recession and this will make unemployment go up. Yes, it will in the short term, but over the long term, it will create more wealth and prosperity. Because what would you rather? Would you rather struggle on unemployment, or would you rather struggle working 80 hours a week just trying to keep up with inflation? I don't know about you, but I would rather be unemployed and struggle than having to work myself to death and still struggling because prices are going up out of control. Now again, going back to what would create real equality, we have this deflationary crash. The Federal Reserve lifts interest rates, so all the speculators, all the gamblers that took on too much debt, they get wiped out. All the unproductive debt gets wiped out. The banks that took on too much leverage and speculation, they get wiped out. And of course, the world's not going to end, people. Other capitalism will come up. They'll buy these businesses and they'll make them more productive and they'll make them more safe. And all the people right now that are struggling, that are dreaming of buying a home, all the people that have missed out on the 10, 15 year bull run will be able to get into the markets for a big discount. And this will create more wealth than the people that have missed out over the past 2 decades. And while it'll be painful in the short term, over the long term, we'll be able to rebuild from a much more sustainable base. And lastly, you have to teach people financial literacy. Most people understand nothing about finances, but if you're watching this, you probably do. They have to stop this consumerism culture and teach people how to save and invest. And they also got to teach people about taxes, which I think they'll never do. But everyone, I'm starting to rant a little bit. That was just some of my thoughts quickly on how I think we could fix inequality. That's just some of my thoughts on Ray Dalio's comments and all these CEOs that are selling out to China. But what do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.